Good morning, everybody. If you're new to trading or charts, if you're wondering what a big red reversal bar looks like, that's it. And it took out these highs. It barely took out that pivot high there. And at the end of the day, and the buyers didn't show up to save, and things collapsed pretty much across the board. Not much of a bounce going on here. Back to our factory work. See if it stays in the lower half of there. This did create a void because of the sharp drop. So there doesn't have a lot of resistance, but what we do is take this thing, right? And we will drag it down here. That minor resistance area. Look, this is where it stopped. And just kind of marking time here. And typically that's what happens after a day like yesterday. Markets mark time, kind of unusual in that, the news related, so much new stuff, banks and so on, the Fed, interest rates and all of that. A nail in the coffin pattern. We could call that, we can make it up. It's kind of like I don't know, think about names. I see something like that as the wooden stake in the heart of Amy Bull. That's one nasty bar. But look at it, it stopped right on the 200 MA. It is on support. So, stopping at that level probably was not by mistake. On SPX, I think it was right around 39.50, which is a level. In SPX, the whole numbers and the half numbers are typically where the open interest bills around. So we've been talking about that 4,000 level forever. And so it went down to next, and we'll see how far away it might get from here in the coming days and weeks. Now, the first thing, is to see how this weekly bar ends. And then we reinforce this idea of staying in the bottom of the wide range bar, because what we see here on the weekly chart is the candle body, and that is what needs to stay in the lower half, the candle body. Not that often, but it does happen where you get a tail bar like this that goes well beyond. And so I want to make that clarification on the rule of staying in the lower half. It's the open and close of the candle bodies that we want to see stay in the lower half. And this is like a bonus, an added plus, to have a topping tail on the top there and on the daily chart, having taken out this and then move back down. How erratic this has been. I think it'll be erratic for a couple of days. The ideal scenario, maybe today and tomorrow, maybe chopping sideways here a little bit, getting a little time correction away from this stuff. But ultimately, with a bar like that, historically, it should go through it. And then I think ultimately, of course, we'll down to that prior pivot there. But with this type of a pattern, I would think it's coming down here. But step by step, we'll see. And this is very bearish. What happened 3 weeks ago, and now we've got this topping tail bar, this ugly bar from yesterday, more things coming together. This week, I spoke about the potential for at least a turn happening. I didn't think this, but a turn happening, because when this breadth internal in a downtrend, this comes up to the zero line. It's typically a good timing guide as to where selling would pick up. And sentiment through this move lower never got down to a bullish level. That's complacency. And so this tells us that there's gas in the tank for prices to come down. We'll see to how far, but the faster these option traders start loading up on put options and this line start coming down into these bands and maybe even below 1.2, because I'll scroll back here. You see where it got down here during that last, nasty drop, but coming down to like 1.4 or so in a bear market is pretty common. So that's what I'll be looking for in the coming weeks. And the hesitancy in my voice is this crazy market. I can't even imagine a bar like this being negated. However, we've got this, over enthusiastic look at, what's going on here in tech, but interest rates moving down. But is this, I can't see how that's going to survive, but maybe during whatever correction continues here, we want to see show relative strength, since it showed this strength now, and that'll be part of the underpinnings of a new advance once that time comes, that this strength did occur. I mentioned earlier in the week, the WE, the fact that there are, a few stocks that are really making that QQQWE. Someone will help me with their EW. QQEW. There we go. Lower high, lower low. And so when you take the fangs out of there and some semiconductors, you get a cleaner view of what's going on under the hood. All right, let's continue. All right, so there's big reversal bar, futures down at the bottom of the range, all those tails down there. Should go through it, little minor retracement, and that might be a momentary stopping point on the way down here. I don't know how far to get down there today. I don't think so, only because historically after a day like this, it tends to be a consolidation day. We'll see how it moves along. SPX. All right. So we've talked about the 4,000. I just kind of eyeball that around 39.50-ish, where it stopped yesterday in the 200 MA. Averages around 72 points now. The ideal is to get beyond that average range from yesterday's close. Not much of a gap here, but can we get beyond those? And what I had written down, Jake's got 40.20, in which I had 40.15 with a note of 40.20. And it doesn't, oh, here we go. 40.20. Ain't much at 40.20 anymore. It's kind of evaporating. So it's not the premium that I would hope for, but on the downside, it should be increasing, which I had 38.75, which is Jake has. Maybe we get a little below that if it drops in the morning to 38.70. So here, the 72 points is around 38.65. But that is a lot, 2 wide range bars in a row. It's not out of the realm of possibilities. But more likely, I should say, is, you get your big, nasty red bar. It's followed by, the little narrow range bar. And then potentially the next day you get the follow through with a wider bar, which could be on Friday. So neither one of these I would say is no brainer. I would not think this can go back up here, but crazier things have happened. So, 4,000 will be a stopping point now if it could get up there. And this minor resistance area. And down below, we've got at least a pivot at 3,900. So some lines of defense there. To get all the way down, well, below that, I think would be fine today, that 38.75 level. All right. So NASDAQ continues to show relative strength. It had the big reversal day. You can see the hourly chart, stopped on these pivots here. And now it's retraced to minor resistance. And so now chop, 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 indecision, back and forth, opposing pivots. Stay out of its way for now. When you see something like this, the message is stay out of the way. Just playing ping pong there on a short table. Relative weakness, it couldn't get up to the MAs. It's on this pivot on the weekly chart. Nasty red bar down, ultimately down to the bottom of the trading range, and I think even lower. And we'll see what happens when it gets there, of course. But the fact that this has now gone sideways, as long as this has, it's going to get interesting as to how this correction continues, because you now got almost a year of sideways. Now, if it should break through here, you've got a new resistance area. And so would still expect it to bounce off of there because that's just what it does. But ultimately, well, two things. This is a wide trading range. So normally if it was a tight trading range, I think it would go lower. But look, once this breaks, it's going to be type of a 100% correction. Let's hope it goes down and breaks through here quickly, because then it'll have greater likelihood of a bounce and greater opportunities for shorting. Now, when things just drop like this, I don't know about any of you, but in this time frame, I'm sitting on the sidelines thinking, will it retrace? Intraday patterns we can find, but when things fall like this, one bar after the next, there's no way of getting on board, because the risk to reward is just, forget that. Forget it. All right. The Dow, nasty reversal bar. We talked about this, the wide range bar, and then you go, bodies are in the bottom there. And this has plenty of room to drop. It doesn't have to get there, but there's nothing to stop it. Once it breaks below here, which is basically this week's low, there's nothing to stop it from going down. But we'll continue to update it as time goes on, as new pivot highs form. Everything dropped. Transportations, they were weak. There's a pivot there. It should go through it. This isn't a downtrend now. Weakness. That should blast right through that. Well, maybe not blast, but it's going to go through it. And interest rates. It's hanging here. And kind of what we kind of don't want to see is it really break sharply below here, but that's going to be in alignment with this theme of recession, because interest rates are going to come down. And then, of course, Fed raised a quarter. Let's see if this eventually starts. We'll be keeping an eye on this if it actually starts to inch lower. And if it does that, then that'll give us a guidance that maybe the Fed really is going to back off. So we just got to keep monitoring things. So what's happening? All right. Dollars getting whacked. It's moving down. Bitcoin, which came in quite a bit yesterday, and had that really nice move during this banking situation. Money looking for a home out of the banks. Certainly looks like this was one of the places that it went. We'll see how much it holds up as it begins to pull back. And crude oil is going to form a sell setup here. It was basing for the longest time. It's coming up into minor resistance. It would hit that pivot. It bounced up off of it. And same story, wide range bar on this time frame going sideways. So I suspect some choppy price action today, and we'll see where it goes from there. I think coin just taking a hit because of the drop in Bitcoin yesterday. That's following through in a huge way. So they got a Wells notice, Lawrence is saying. So if anybody doesn't know what a Wells notice is, if you're a brokerage firm and you get a Wells notice, it's one of those things that makes you stain your shorts when you get that from the regulators, because it ain't good. Dad said it's not a Christmas card. Yeah, so that's serious stuff. Right. I'll let Dan handle that, John. John is asking about Tesla, Dan, and 200 being resistance. All yours.
Good morning. Yeah, a lot of things moving here this morning. Let's jump right into it. As Greg said, the Q's holding well. All the FANG stocks they all have beautiful gaps on the 15-minute chart, different levels of resistance, but that's what's holding that up. Tesla, same, gap in here in the middle of the range of this breakdown. So there's nothing to do. There's no setup right now, nothing to do. There's a nice gap breakout. Someone's asking about Meta. Same, it's in an uptrend, amazing strength, 2050, bullish weekly, gapping 50%, maybe 60. Nothing to do right now. Nvidia, same, uptrend, daily, weekly, all time frames, but nothing to do right here, no pattern. So Square, the news came out that Hindenburg company, which targets their infamous short sellers, this thing's down 20%. They said, now I'm assuming they're in the business to make money, obviously, both selling research and also trading. So with 99.9% certainty, they don't issue a report until they're already positioned. And so now the report comes out. This is like the opposite of these advocate firms, or Buffett says, oh, I've been accumulating a position here, and then the stupid thing gaps up, although the past tense, Buffett's already been accumulating for the last 6 weeks. But that's the idiocracy of the masses. So this is the opposite. But I'm shocked that this company is so darn powerful with its report. So it's gapping here to this prior low. And my bias of this, long for day trade with the right pattern and sell an expensive 1 DTE put spread. I'm not shorting this thing. So that's that one. Oh, what's the other one we were talking about? Oh, coin. Yeah, they got a Wells notice. I gave this as a core long right here, but with 100% degree of certainty with that big old run, we would have been out of it. I would have said, hey, this is one of these cores. Let's go ahead and book an amazing gain. And then we'll look to get back in. But yeah, that's getting walloped. But also, look, it's gapping down here to the 5,200. So 30-minute high, my bias, 1 DTE put spread. That's my bias. I'm not doing anything until I send the telegram button. Nicola helped. Hindenburg heard. Oh, by what? By saying they were a piece of garbage, Lawrence? Yeah, look, this thing looks like it's going to 0. Wow. So McGraw, yeah, you were asking me about, I posted WMK is an igniting gap. So I'm not sure what your question is, McGraw. Yesterday, MT Live, we talked about shock patterns, right? This is a shock pattern. Why? Well, because it's gapping over this 3.5 weeks of resistance and over red bars. So if it's gapping, right here, but if it can hold these gains, then it has a void, 87, 88. Oh, okay, cool. Yeah, I looked it up to see if it was earnings, and then on TC, and then I noticed it said it was a grocery store. Never heard of it in my life. I've heard of Albertsons, it's Public, Kroger. All right, let me just start down here and we'll just go up my watch list. Daku is a sell setup with a multiple bar turn. Today's Thursday. The entry would be under Tuesday's low. I got an alarm. AI, we're already long stock, but I posted it as a put spread. And I picked this ugly 15-minute wide range breakdown of being the entry. Because right now, just like many of these fangs, although the dailies don't look like the fangs, but 15-minute chart does, bullish 50% gap. I have no idea what's going to happen in the first 30 minutes. Are the bulls going to drive these gaps higher? Or are we going to retrace into the gap? Billy, here's another shock gap. Gapping over a red bar after 100% retracement. So let's see if that can hold the gains. Yeah, I was looking at KBH here, McGraw. This had earnings though, but that was a beautiful gap breakout on Tuesday. But for earnings, absolutely, that is a beautiful gap breakout. So we can watch on. Well, see, now it's gapping here to 39. So I'm going to take it off my list. If I were in it, I'd be selling pre-market actually. Bido here, Climos. I'm watching this for a call spread. Ford came out and said they're going to lose $3 billion on EV stocks. Crocs, McGraw, you gave me this under yesterday's low call spread. We're actually short a couple things. We're short ANF, looks great. I don't see any prints. We're short CEG, looks great. I don't see any prints, but I'll be watching them to manage them. ACN. This had earnings getting up to 261. All right, there's another shock pattern. It's negating this sell setup. So McGraw, if you can help me. AI Dan. Yeah, it's next week, 331. Let me see what I typed on AI. Shorting March 31 over 20. Oh yeah 2118. Yeah, my brain. Yeah, thanks. Yeah, my brain just, you see what it did. I'm just throwing this in the 21:18. But yeah, I mess these things up. So yeah, thanks for watching it. All right, so McGraw, here's another put spread idea. Square. Well, no, it's another. I mean, tell me what time frame and what the setup, Alex. But no, when I get a big old gap like that to major support, I'm thinking put spread or day trade long. WR earnings, no prints. Same, no prints. PAC W. A lot of these regional banks look the same. Oh, that guy, Lickstein. He's a famous real estate investor. And he's a smart cat, in my opinion. I like listening to him. And he was trashing the Fed with their aggressive hikes. He said he researched a bunch of these regional banks, and the majority of them, if you had to mark the market, they're all bankrupt. But it was a nice little interview if you're interested in that fundamental stuff. All right, just to show you what a tier 1 gap would be, anywhere where my horizontal line is here, gapping over these, or like 740 to 750 would be in tier 1 ideal bullish shock gap with a price void. I would buy a 5-minute high or some type of controlled pullback and reversal within the morning period. But the problem is the gap's too big now. Look where 820 is. So I have to delete that one. Oh, Alex, no, I got you. I'm sorry. No, we did a bear call credit spread. And here I already sent an alert. I said bid 2 cents and or stop 5-minute high. So I already sent that out. Micklin here could be a day trade short if it can't bounce, or sell setup into a bounce. KVH we talked about. Chewy bearish gap. McGraw, another call spread candidate. So there's actually a number of interesting 1 DTE candidates. All right, this could turn out to be absolutely beautiful. Look where it's gapping to my horizontal line. If this can chop around for 5, 10, 15, 30 minutes, this is a beautiful gap trade. You got the void up top. I'm putting that in a window. Oh, I already got it in a window. Other computer. All right, so yeah, when I announce these tier 1 trades, you all, I like when the green room helps me monitor them. KHC. So Greg, I had this as a short in last weekend's letter, and then I canceled it yesterday when my up alarm went off. But let's see how that closes. Still weak. Nasty gap on FDS. But it looks like, we can't tell anything here after 15 seconds. But on DRI, another put spread idea. CMC, kind of a bottoming pattern. We'll come back to it. Qualcomm, I posted as a call spread under yesterday's low, but based on this gap, it doesn't look like it's going to trigger. AD line 1500, tick soaring. So out of the gate here, there's bullish price action. All right. Netflix is flying. Snap was on our list yesterday. Now it's a gap, so it's still on my list. In the FANG department, Netflix is flying. Wow! Now, remember yesterday I said this looked bearish on all time frames. And yesterday, MT Live shock patterns. One bar changed my bias from bearish to bullish. So this is another put spread idea for tomorrow. I'm going to look right now myself. Maybe 295. 59 by 65, 61, 65, not bad. $10 wide's 42 cents. I mean, if it were 0 DTE, I would just be hitting that button right now. So the hesitancy is it's only 9:32 and the day's early, but this is very bullish price action. Let's watch it on a pullback. Shop was on my bullish list yesterday until that afternoon sell-off. Oh, and the news on that afternoon sell-off, and I didn't know this at the time, was Yellen came on and said, no, I didn't say I was guaranteeing all deposits. And remember, we had that talk in the room. And I said that, I'm like, guys and gals, it's still a systemic exception. It's not blanket like some people think. All right, GPI was a short idea yesterday. I still like it.